Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day Overtime Edition. On this Monday Stock Play of the Day, we discussed Walmart. Today we'll discuss, did we score or did we fumble? Hello, my name is Brian Overby. I am the Senior Options Analyst with Ally Invest. On Monday's Stock Play of the Day, we talked about Walmart, and Walmart specifically was announcing earnings on Tuesday before the open. So we discussed a trade that we actually came up with a name for. We called it the FOMO trade going into earnings. FOMO is an acronym that just stands for fear of missing out. Now, the concept here was that, well, Walmart's had a good run up since its March lows. And because of that, well, maybe we wanted to buy some Walmart. So the concept would have been in your head, even though this is always a paper trade that we talk about on the Stock Play of the Day, is that, well, if I was interested in buying some Walmart going into earnings, that earnings report is going to bring some risk to actually buying the stock outright the day before they announce earnings. So what's a trade that we could do that could allow us to buy more if the underlying went down, but also give us some upside if the underlying went up? So in this instance, we sold a cash secured put below the underlying market. The strike price was below where the stock was trading, saying we'll buy 100 shares if the stock goes down after earnings. But then we used the credit from that short put to go out and buy a long call spread that would be profitable if the underlying stock went up. We did the entire trade for a net credit of 20 cents to the account. So let's see what happened in Walmart after they announced earnings. What I am showing here on my screen is a chart of Walmart, and it's a 15-minute chart. So we see on Monday, we always tape the Stock Play of the Day at noon Eastern time. It is a live show, so the quotes were streaming, but the stock was trading right around 135.31. So I highlighted that point here on the chart. So this is the noon Eastern time, and this was Monday on the 17th of August. Then this would be Tuesday. This is the trading all day Tuesday, all day Wednesday, and then all day Thursday, and so far today on Friday. So what has happened? Well, after Walmart announced earnings, the stock actually made a decent run up on the open. It was actually jumped up above 137, but it only stayed there for a few seconds. And then the underlying stock came back down, and then it went back up above where we were at when we were talking about the stock on Monday. But once again, only for a few minutes did it hang out at that level. And it got up to about 136. Then we saw it kind of flatlined, and then it just slowly drifted down, which is a little bit odd in that a competitor of theirs, Target, announced the very next day and actually had a really good earnings report. And the underlying stock actually went up 15 points the day after their earnings report. But with that said, let's see how our trade played out as far as what we were looking to do in Walmart. We were once again Once again, we had in our head that we wouldn't mind buying 100 shares of Walmart if the underlying stock went down. So here's the trade. If I go to the Ally Invest option chains, we see that Walmart today is at 137.76. It's up $1.19 on the day. On the right-hand side of our chains, we see that we have the put options, and we have the expiration date that we were trading in on Monday. That's the August 21st expiration. Today is the last day to trade these option contracts. And what we did with the underlying stock at 135.31 at that point in time, right now it's pretty close to 132. We actually sold the 132 strike put. We took that credit, and then we went out and we bought the 136 call. That was to give us some upside if Walmart went up after earnings. And then to help make this trade done for a net credit to the account overall, we actually sold the 145 135 strike call. Apologize for that. Or the 140 strike call. So in this instance, if I look at this entire trade here, we were able to get that done for a net credit of about 20 cents to the account. Now, if I do this trade, I have to have the capital in my account to buy 100 shares of stock at 132 at that put strike price. That would be $13,200. But now we did bring in a small net credit to the account. The credit that we brought in was 20 cents. That's money that we can put in our pocket. So our actual cost basis, if the underlying stock went down, would be 132 minus that 20 cents, or 131.80. That's where I'd be looking to buy that underlying stock. And it's kind of interesting because the stock is hanging right there, 131.88 as we speak here on the Stock Play of the Day Overtime Edition. So were we really hurt on this trade? No. The concept was we wanted to buy the underlying stock if it went down. It's trading right at that strike price right now. The underlying stock did go down below it, but if we did not get assigned on our put option, we have 1 day for this underlying stock, or for these option contracts to exist. At the end of the day, they stop trading. The options would expire worthless. There's really not much on the upside. If I scroll down and I look at our workbench, we bought the 136 strike call. We sold the 140 strike call. They're both trading for pennies at this point in time. So there's nothing to try to capture there. Now, could you have sold it when the underlying stock went up to 136 this week? You could have, but I highly doubt that you would have. It just basically hit your long strike. And ideally, the concept was that we're going to let this trade play out for the week, see where Walmart was at, and maybe we buy 100 shares of it, or if it goes up to 140, we max out on that long spread that we actually did. Neither of those things happened in this instance. So now we're looking at, well, what happens if the underlying stock stays between our strikes? In other words, it's above our 132 strike and it's below our 136 strike. Well, nothing really happens. If you still want to buy the underlying stock, you buy the underlying stock. You just go out and buy your 100 shares of stock at whatever price it's trading at. It's going to be somewhere between 136 and 132 in that instance. If it goes down and it finishes below 132, guess what? We buy 100 shares of stock. Where are we going to buy it at? 132. We got a small credit, which was 20 cents. That'll help us out. That would be $20 to help us purchase our 100 shares of stock. But bottom line is the trade actually accomplished our goal. It was a fear of missing out. We had the concept that we wanted to buy 100 shares of Walmart. The underlying stock really didn't do much after earnings, which was kind of unexpected, especially in this time and the volatile marketplace that we're trading in nowadays. So it did what we wanted. It accomplished the fact that we wanted to buy 100 shares of Walmart. We're a little bit worried about that earnings report. It allowed us to participate in that earnings report without all the risk of actually just buying the underlying stock outright before that earnings announcement. So that's it for this edition of the Stock Play of the Day Overtime. Please ring the bell. Please click subscribe and ring the bell, and we'll see you Monday at noon Eastern time for next week's Stock Play of the Day.